Bitcoin itself still has a very bright path ahead, given all the macro tailwinds coming up, as well as the fact that this cycle really haven't seen any blow off tops, any euphoria stage. So really the case on Bitcoin is very clear. But also I will cover altcoins very extensively today on my stance of how to play the altcoin markets, comparing this cycle and what really has happened to the last 2 cycles and how it's really different this time. And Bitcoin and altcoins as a whole are completely being decoupled. And thus, what my current plan is going into 2026, how much do I want to hold in Bitcoin? How much do I want to hold in altcoins? And do I even want to hold altcoins in general? Okay, so if you guys are new here to the channel, welcome. My name is Dennis, and let's go ahead and get started. So I have 2 main sections of today's video that I want to cover. So first, we will cover basically cycle-related stuff, price-related stuff for Bitcoin, but also for altcoins. But also, I have a to-be developing thesis on the macro conditions and why the macro looks really good for Bitcoin, and Bitcoin has really benefited based on liquidity, based on M2 money supply growth, based on macro, but not altcoins since 2023. And I'm pretty close to putting together all that thesis. So I'm gonna present to you guys towards the end of this video as well as a first teaser. So first, let's get into price-based cycle analysis. Let me see if I can put myself in a good spot here. So where are we at on Bitcoin? The main bottom line that we have been watching is the 50-week simple moving average. I'm not going to sugarcoat this. I did not expect the 50-week to be broken like this. I don't think many people did either, because it has not been broken since back here. I'm even going to take out these for now. So as long as we stay below the 50-week simple moving average, this is not bull market. This is not, likely to trend up in the short term. That's a fact. One caution I want to give people is that you really want to make sure you understand what you mean by saying this is bear market, because in the last 3 Bitcoin bear markets, the drawdowns from the top to bottom were 76%, or back here was like 83, 84%, back here like 85%. It's extremely unlikely for Bitcoin to drop 75 to 80% from the top from this point on. Let's say on average 80%. I mean, if we go down below 30K, what are we even doing here? What's really happening? You got to think about how this cycle has really unfolded. We didn't have a euphoria top. We didn't reach any of the expected valuations of Bitcoin compared to the power law, compared to the rainbow waves that you see everywhere. So Bitcoin has really been a much more subdued asset now. So we did not get anywhere close to those 180K, 200K marks, which likely means we're not going to get very extended bears, at least not as deep as 80% corrections from the top. So from 125K to like 30K. I don't think that's happening. And luckily, I don't think anyone else expects this either. Really, I haven't seen anyone calling for this. So that's good. I think that is the right call. Cycles performance aside, what are the potential support levels in a bear now that we do have this bear? So the 100-week and 200-week simple moving average, a lot of people have been watching these. We are already touching the 100-week, so there is a bit of bounce already coming in. some people say we should visit the 200-week simple moving average, which is currently at 56K and probably will trend up towards 70K by first half of next year. It's possible. I don't think it's that likely, but it does coincide with this previous, super long choppy range that we had in 2024 as well. If you take the middle of that range, let's say around 64, fair enough. Okay, so I think that's probably worst case scenario for this bear market. So then we can look at just based on price. Where are we at now? We are at 90K. If what we are expecting is a slow bleed chop bear market for 6 to 12 months max towards 70K-ish, is Bitcoin a buy right now? The answer is obviously yes. From 90K to 70K is not that much more, considering how much of a capitulative drop we've had. So that's a big takeaway. When you say bear market, yes, we have broken below the 50-week simple moving average, which means likely we're not going to see all-time high very soon. Probably not for 3 to 6 months at least. And if we look at previously, even if you're with me and you don't believe that the 4-year cycle based on the halving events are that accurate anymore, it's really based on liquidity cycles. Still, when Bitcoin drops as much of a percentage like this, breaking below the 50-week simple moving average, it tends to take how long of a period before it finds a bottom? Usually that's around 12 months. I know many people have covered this already as well, from November 2021 until December 2021. And then from December 2017 to December 2018, top to bottom, usually 1 year. So from the top of October 2025 to October 2026, everyone's already looking at these. That's fair. But it doesn't seem fair to say from here until October 2016, we should drop to 30K. I think that's highly unlikely. So with those two rough bottom targets, okay, we should see the bottom before October of next year, but the bottom should be a lot closer and way less than an 80% drop from the top. Realistically, more like 70K as a bottom, 60 to 70K range around the 200-week simple moving average sometime next year. Then the pattern would not look like this. Okay, this is not the type of bear market we should expect here. Instead, what we should see is chop, a lot more chop in these ranges, bottoming maybe in the high 60s, low 70s. Okay, so when you draw this out in a chart, maybe extending all the way to here, October 2026, and you compare that to current price, 90K in November 2025, Bitcoin is a buy. It's not a sell. I don't think this is the period where anyone should be walking away from Bitcoin and saying, hey, look, it's now a bear market. I'm going to sell, and then I'm only going to come back 2 years later. You're mainly missing out on the actual buying, which is already starting to happen now. So that's big caution that I have for people. This bear market is not going to be like the past bear markets, because the last bull market is not like the past bull markets. Very simple. And even looking at this, right? Let's say we have 6 months of chop. It wouldn't even be very different from this chop right here, where we had from March 2024 till October 2024, where Bitcoin saw a local top at 72K and then dropped to 54K. So all in all, it will be a painful period, but it won't be a extended bear. That's not what I believe in. Okay, so with that being the price backdrop, let me look at my notes here. 1 sec. So with that being the price backdrop, expectations, yeah, so my current plan on Bitcoin, holding all my Bitcoin at the current moment and not considering selling at all. in the immediate short term, since we have touched the 100-week simple moving average already, and really this extended drop over the last month and a half has just been the craziest sell-off in Bitcoin history. I saw this chart from X I think last week, where they compared Bitcoin's drawdown currently compared to the 200-day simple moving average. By the amount of time we have spent below the 200-day simple moving average and just how much we have spent below it, this is a bigger standard deviation than, this is a bigger deviation than the COVID drop already. So this is essentially the biggest extended drawdown we've had in Bitcoin history. So yeah, just some points to consider. This is the time to buy, not to sell, at least on Bitcoin. Okay, very clear to me. Now, in the immediate short term, we should get some sort of a relief rally towards the 50-week simple moving average. Even in the past bears, when we break down below the 50-week, it tends to revisit it. So currently that 50-week SMA is around 102K. It will come down a little bit by the time we are there. So around 100K in general. Once we get there, okay, let's say we do get this bounce. If you want to sell, let's say you're very heavily overextended on Bitcoin and in altcoins, this is probably the point to sell up here when we actually revisit it. I'm pretty confident in us getting this bounce because of the short-term tailwinds. We know that the Fed is going to be cutting rates on the December 10th FOMC meeting by 82.9% chance. And QT is going to be pausing starting December 1st. So yeah, towards the end of the year, this is plenty enough. The other major catalyst is the drainage of the TGA account, which has been built up since the government shutdown. So the government shutdown has ended about 2 weeks ago. And the rough number was the TGA account got filled up to $920 billion. And typically, the level that they want to target pre-shutdown was $850 billion. So there was about $70 to $75 billion of liquidity to be spent from the government's checking account into the economy. And that's a given. So that will be stimulative in a bit, combined with the next rate cut coming on December 10th, combined with at least the expectation of QT pausing, even though, we're currently only at a $5 billion per month shrinkage from QT. Those should give Bitcoin a slight boost. So those are tailwinds that I see us potentially getting to 100K with. But once we are at 100K, it's anyone's guess. Whether we break above it, then great. Maybe this is a very short-lived correction. Or if we get rejected by it, I'm not willing to make a call here preemptively because by previous cycles, by previous trends, each time that we have convincingly broken below the 50-week moving average, the next time we revisit it, we do see very heavy resistance. So I am bullish on Bitcoin, but to call this like for sure going to reverse, it's a pretty hard call. I think we have to see once we get there. Okay, so that's in the short term. If you're very heavily overexposed to Bitcoin, to altcoins, you should wait for this bounce before de-risking. But don't FOMO into the bounce when we get it, when we are at 100K again, touching the resistance. Okay, so, and then in terms of Bitcoin going into the next year, again, just to repeat my base case, the bottom should be before October 2026, and the ranges should be somewhere in the high 60s, low 70s for a bottom. Somewhere up here, depending on really when this comes, when the 200-week SMA comes up to meet the next leg down. Okay. That's on Bitcoin. Now, let's talk about altcoins. One main takeaway that I have really observed in this cycle, even if the 4-year cycle is really not like the past ones anymore, where we don't have euphoric blow off tops and we don't have 80% drawdowns, because that's the base case now. Bitcoin is unlikely to have those. Altcoins have completely abandoned Bitcoin's cycles, because when you look at, by all metrics, you look at Ethereum, you look at Solana, you look at XRP, you look at any altcoins, total 3, excluding stablecoin compared to Bitcoin ratio, it did not rally for this entire cycle. Why? Keep that thought, okay? Of course, this will look the same on Bitcoin dominance. We had this end of cycle drop, but basically this was only driven by Ethereum for a couple months. I really expected all other alts to follow, but they didn't. Every single time before, when Ethereum has rallied compared to Bitcoin in their ratio, altcoins followed. This cycle, it didn't. Why is this the case? Okay, so we really have to consider what is different now for Bitcoin versus altcoins. Why are Bitcoin and altcoins so different now? And my thesis has always been driven by liquidity. So when you look at the global liquidity chart, let me bring it up and let me bring it to new scale on the right. Let's scale this to auto here. And when you consider all liquidity, including M2 money supply, so the total amount of money in the system, it's able to quite accurately predict the tops and bottoms of Bitcoin. And since M2 supply is still up, Bitcoin should see more upside after this corrective phase is over. But when you compare this to total 3 excluding stablecoins compared to Bitcoin, you see that this has been trending down, even though in the past cycles it trended up when M2 money supply trended up. And we have observed this behavior before, where if we exclude M2 money supply and only look at central bank liquidity, then the two match up. So here is the global liquidity only considering central banks and their balance sheet, the reverse repo and the TGA account, then the tops and bottoms are clear and the trends are heavily correlated. So why is this the case? I really dug a bit deeper into the macro and try to understand this. What really separates global liquidity in terms of central bank versus M2 liquidity comparing the total money supply? The answer is, who's the driver of liquidity? So when M2 money supply grows, as we see on these charts, it doesn't have to be coming from the central bank, because the total amount of money in the system, when the central bank is shrinking their balance sheet and the reverse repo is being drained, central banks are taking liquidity out of the system. So how does the M2 money supply actually grow? In this period, it's the government, the government treasury that actually injects new money into the system, thus increasing the money supply, increasing M2. They do so by running a larger deficit, issuing more treasury bonds and treasury bills, doing more borrowing. So they sell bonds to the general public, to funds, to asset managers. That cash goes into the government in exchange for treasuries. But this cash going to the government is then spent again into the government programs, such as with stimulus, with government spending to pay back their the government interest, etc. So that is where the boost in M2 money supply has been coming from. since late 2022. It has not been coming from the central bank. You can just Google this briefly, you will see. So since the M2 money supply growth has been coming from the government and not the central bank liquidity, the fact that it's able to prop up prices for assets like gold and like Bitcoin, and also for the blue chip indices like the S&P and NASDAQ, this is very telling because very selective parts of the risk-on assets have rallied over the last 2 years. Only the largest of the largest assets, gold, Bitcoin, NASDAQ, S&P, what else do you have? Select commodities. That's about it. AI, for example, anything that's the Magnificent Seven, when you look at the US equities in general, excluding the Mag 7, the performance is very, very mild. But including AI and Mag 7, it all of a sudden is up only over the last 2 years. So that disconnect in the US small caps, excluding the Mag 7 and excluding AI, is very similar to the disconnect where we have in altcoin market compared to Bitcoin. So let's look at this, right? There is this index called the Russell 2000. I'm sure you guys are familiar. So the Russell 2000 is the 2000 smallest market cap equities in the US stock market put together as a weighted basket index. This in function is very similar to the others altcoins market cap if you want to draw comparison to the S&P. So I thought, okay, what if we look at the Russell 2000's performance compared to the S&P, similar to how we look at altcoins performance versus Bitcoin. And I found really the reason here. So here is the Russell 2000 compared to the S&P. And you see the Russell 2000, the small caps, the high risk stuff of the US equities market has been underperforming the top of the line stuff. Just like how altcoins has been underperforming Bitcoin. And when you overlay this with the shrinkage of the central bank liquidity, you see a very similar scenario where the central bank liquidity pumps, Russell 2000 outperforms against the S&P. But central bank liquidity drops, the small caps equities underperform against large caps. Just like what we've had on total 3 altcoins compared to Bitcoin. Very similar performance. It's really not just because, like altcoins are being flooded or anything like that. It really is different parts of the sector now. In previous cycles, Bitcoin was still a risk-on asset. It has never been this heavily correlated with Bitcoin. Bitcoin has never been this heavily correlated with gold or with the S&P. But when you look at their current correlation here is Bitcoin's correlation with gold. And I'm going to hide that one. And over a 12 months rolling close of Bitcoin correlation with gold, it has only started to be correlated heavily since December 2022. What really changed here versus previous cycles? This is the difference that Bitcoin has experienced over the last 2 years. This is the so-called silent IPO moment that Bitcoin has experienced. So Bitcoin now is in that basket of surefire things against debasement, against inflation, where hedge funds, sovereigns, asset managers, ETFs, mutual funds, basically anyone that actually cares about treasury yields, where can they park their trillions of dollars in treasuries or in some surefire things like AI or the S&P or gold, in order to beat inflation. Bitcoin has officially entered that basket. As you can see, its correlation with gold and its correlation with the S&P. It has never been this correlated. So this directly explains why M2 money supply growth, largely driven by government liquidity, fiscal liquidity, is able to drive up gold, is able to drive up S&P, AI, Magnificent 7, and Bitcoin, but not Russell 2000s, not your altcoins. And probably there are other many risk-on stuff that fall into that basket. I'm sure equity investors can agree with me here to some extent. Like if you have been invested in large caps, the surefire things, they have really performed, but risk-on stuff has not. So bring it back a bit, okay? Because of this, we have this because we have this disconnect now of Bitcoin compared to altcoins. Basically, every single altcoin, including Ethereum, including your XRP, your Solana, BNB, whatever. We really have to treat them differently. Bitcoin itself is going to have very likely another bull run next year, another extended rally up, and especially at current prices around 90K. Even if we drop to the 70K marks towards the 200-week simple moving average over the next 6 to 12 months, it's still a buy, because we know that the government is going to keep issuing more treasury debt, and that will be acting as liquidity on the M2 chart, but not on the global liquidity chart, which will do what? It will prop up prices on gold, prices on S&P, prices on NASDAQ, and price on Bitcoin. Way more. But it's unlikely to flow into altcoins, because we are in a stage of we are in a regime of fiscal dominance as opposed to monetary dominance. So when it comes to altcoins, the one chart that a lot of people have been looking at more recently is the altcoins compared to the ISM. So the US PMI data, or in other words, the business cycle. Here, let's do this one. Let's merge all scales, pin to new right scale, auto. Here you go. So on the candlesticks, we have altcoins performance against Bitcoin, and on the green, we have the ISM, aka the business cycle, aka how the economy is actually doing. So even though M2 money supply has been growing a lot over the last 2 years, ISM has not been growing, and the economy has not been doing well. So if you run an actual startup business, manufacturing business, your business has not been doing well. And basically every business owner knows this. So that's the real business cycle. That's the real production and how businesses are doing. So unless you are the top of the line stuff that the pension funds, the sovereigns directly allocate into, the Magnificent Sevens or the AIs that run just a circle jerk within themselves, playing around with their capital, you have not gotten the growth from M2 money supply growth. And your business and your profit margins still resemble that of the ISM. And the ISM is really what drives small cap altcoins and also small cap equities like on the Russell 2000s. So going into next year, what's likely to happen to the ISM? We know that the M2 money supply will still grow because more treasuries will be issued, and the government will run a larger and larger deficit. But when can we see the ISM actually take up? We don't know. So who is supposed to be driving the business cycles and helping with employment and inflation and in general, the economy? It's the central bank. It's the monetary policy makers. It's monetary dominance. However, we are in a stage where fiscal dominance really takes the stage. You probably have heard these two compared side by side with each other. So since the COVID times, the central bank liquidity and the interest rate decisions and all the macro decisions that the policymakers are giving us now are have the goal of supporting the government's deficit. That's what's called fiscal dominance. So as long as we have the government in charge, Trump in charge, and the administration in charge, they have one goal, which is to help their deficit problem, to help them issue more debts, to finance their debt so that the government doesn't go bankrupt. In order for them to do that, they have to issue more and more treasuries. They have to find buyers for treasuries. They have to prop up the M2 money supply, but they don't care as much about employment or inflation. And thus, the Fed really doesn't have much power to act now. Even though the Fed is supposed to have this dual mandate of employment and inflation, and in turn that goes into the economy, goes into the ISM data, they can't do anything. So this is why next year, even though we will have more rate cuts, we will have QT being paused and potentially QE restarting, the extent of which is probably going to be mild compared to previous cycles. Because the Fed doesn't really make the decisions now. The government makes the decision. The Treasury makes the decision. And especially after Jerome Powell, his term as the Fed chair ends, and Trump installs a new chair that just follows what Trump says and does whatever he says, the end result there will be rate cuts will only come later. Rate cuts will only come after more and more treasuries have been issued and interest rates have, the 10-year treasury yield will have been pushed up, and thus they need more rate cuts to come in later to bring down and counteract those effects. But they will not use the two tools of rate cuts and balance sheet operations to support the central bank's goals. They only want to support the government's goals, which is with funding the US deficit. So this is why we have to be really careful here in saying, okay, more rate cuts and pause of QT will lead to the ISM going up. At some point, it will swing up. It always does, right? It's a business cycle. It's not like, oh, business in the US is forever over. That's not the case. At some point, it will swing up. When will it swing up? It's very hard to say. We can't really watch what the Fed says now to say, okay, the Fed is cutting rates and thus ISM is going to go up. Because they have done that and ISM didn't go up. And they are about to stop QT. But if ISM doesn't go up immediately after QT pauses, it's anyone's guess when it's going to take up again. So does this mean, okay, it's over forever for altcoins and for small cap equities like the Russell 2000? Of course not. There will be a time when they come back. But when will they come back? And when will altcoins see easy times again, that so-called altcoin season? It's very hard to predict now because it doesn't depend on rate cuts. It doesn't depend on M2 money supply. It basically the only two indicators that work now for this are the ISM, We need to see the ISM, the business cycle, actually tick up, which will help real business revenue, including the altcoins. And the other indicator that actually works is global liquidity. Let's move to in this to scale B, auto scale this. Global liquidity right here. When will global liquidity tick up? The answer is we actually don't know. Because global liquidity has not been following M2. M2 can be just easily going up forever because the government says so, because the government keeps issuing more and more debt. But the central bank might not have to act ever. When they pause QT, we should see a bounce. And when TGA starts to get drained again, we will see a bounce. But the extent is actually pretty small. Per month, it's 5 billion of QT that's no longer going to be running off. And 75 billion-ish from now until the end of the year from the TGA that will flow back in. So we should see a bounce. But when will this durably go up again on global liquidity? It's really anyone's guess. So the reason why we have to be extra careful about altcoins now is that Bitcoin, you can still say, okay, there's some sort of cycle intact because look at 2013 cycle, 2017 cycle, 2021 cycle, 2024 cycle, okay? You have periods where it goes up and then like it stays above 50-week simple moving average, and then it breaks down below 50 simple moving average, and then it goes into a bear market for 6 to 12 months. It bottoms out, it goes up again. But because this cycle, altcoins did not see any extended outperformance against Bitcoin. So then what is the altcoin cycle? Nobody really knows at this point. That's the thing that's really, really scary here. Will we even have altcoin cycles? And there is one thing that's for sure, and that is altcoins do not have a 4-year cycle. Because, okay, like they followed Bitcoin's top periods. They followed Bitcoin's euphoria stages in 2017, end of 2017, and early 2021 were the last two altcoin cycles. But this time there was no altcoin cycle. So now we really can't use time periods, date periods to say, hey, look, this is the time when altcoins will pump. It has actually been broken. So unless you are following these two charts specifically, that is the global liquidity index and the ISM, unless you follow these fundamental metrics, you cannot find altcoin cycles. You cannot really find altcoin seasons. Even when Bitcoin makes a new all-time high, like it did in this entire cycle when it broke above 64K all-time high, altcoins had a brief rally, but didn't go much further than that. And then Bitcoin went to 100K, altcoins rallied a little bit, but then came back down. This time around, Bitcoin was supposed to have that blow off top. And if altcoins also had a blow off top, then yes, we can say, yeah, the altcoin season was just very delayed, but it never came. And that's the scary part. And that is altcoins don't even depend on Bitcoin's price now to have cycles. That has been decoupled. So the next time Bitcoin makes its way back up, let's say like it bottoms like 70K or 80K, 75K, whatever, it makes it back up. Yes, altcoins should follow, but how much can they follow? It's scary to think about that fact. It's very hard to say, hey, look, the next time, like, even if we have this and then Bitcoin is back up to 120K and it goes up to 130K, I can't confidently say that altcoins will make new all-time highs. Because when Bitcoin made this new all-time high, altcoins as a whole didn't make a new all-time high. When Bitcoin made this new all-time high, altcoins underperformed. My really one last hope was here, because it was coinciding with the 4-year cycle, right? So, okay, like let's say we have the euphoria on Bitcoin. Only when we have the euphoria, altcoins rally the hardest. But we didn't have a euphoria, and altcoins never rallied to all-time highs. So it's at this point, it's very hard to play altcoins as long-term holds. That's why I say now we look at Bitcoin. I don't want to sell any Bitcoin. I want to buy Bitcoin at 90K. I will continue to buy at 80Ks, 70Ks over the next 6 to 12 months. Like let's say this period as it chops, because it likely will head way higher by late next year. But when it comes to altcoins, total 3 compared to Bitcoin, at some point we have to see it for how it is, and it's not looking good. It will always swing back at some point, but that will only come when the fundamental conditions improve, which is if the ISM goes up a lot, if the economy recovers super sharply, great, then altcoins should pump a lot. Or if you see global liquidity pump a lot, then chances are, ISM is going to go up anyways, and then altcoins will go up, and you will have low cap equities go up like the Russell 2000. But unless these happen, you have to look at altcoins isolated. You cannot look at Bitcoin and then say, hey, look, Bitcoin rallied from 90 to 100K. I'm going to buy all in altcoins. That's not the way to go anymore. This is a big fundamental shift that I'm making in my own plan going into 2026. So to summarize, those points into actual, portfolio plans going forward. Bitcoin, because it's very cheap here, and the bottoms are likely going to be within the next 6 to 12 months, around 70, maybe high 60s, likely low 70s, maybe even 80K was it. I'm going to be stacking Bitcoin very aggressively, very heavily. When it comes to altcoins, I'm not going to be holding altcoins in my long-term portfolio anymore. No altcoins. Not even Ethereum, not even XRP, BNB, whatever. Any altcoins that I touch now will be trades. They will be either, a narrative trade if the narrative is really strong, or some catalyst trade that lasts maximum 1 month, or it's an ICO investment because there is some deregulation coming with Project Crypto, with the fact that a lot more companies can do ICOs now. So if you see like a big valuation gap, like recently I did the ICO on Coinbase for Monad. That launched at 2.5 billion in the ICO, and now it's at like 4.7 billion. So pretty good gains within 1 month. So anything that's in that 1 month mark-ish, where there is enough of a catalyst for you to trade around and you can expect maybe a 50% gain in 1 month, that's a good trade. But that's all I plan to do now. Once those trades play out, I rotate all of the profits into Bitcoin. And specifically in terms of portfolio allocation, I'm putting a maximum of 20% of my portfolio in these altcoin trades in total, in aggregate. I'm not going to be putting any more than that. The rest of it, at least 80%, if not more, I'm going to hold in Bitcoin. So it depends on your own risk tolerance as well. When you're trading altcoins, at any time they can go down 50% within 1 month. Because if you're looking at, potentially your coin going 2x in a month, the downside is probably about 50% drawdown. So then you can say, okay, in your total portfolio, if you're comfortable with losing 10% of your portfolio in 1 month, then you can put a maximum of 20% of your portfolio into altcoin trades. Thus, your drawdown at any given time is about 10% on your overall portfolio. If you don't like this market right now, then you can put less. You can put maybe 10% of your portfolio into altcoin trades. Then your total drawdown is about 5%. Depends on your risk tolerance. That's what I'm going to be doing. And the main takeaway there is going to be stacking Bitcoin. I don't want to be stacking any more altcoins. Because fundamentally, this cycle really broke altcoins. And whether that's, altcoins being broken or just Bitcoin being much more elevated now into a new asset class, much more similar to gold, we don't really know. It's probably somewhere in the middle. But Bitcoin and altcoins are completely different now. You can't treat them the same. So that's my big pivot here, big takeaway. Yeah, I'm going to finish off with a quick list of altcoin things that I'm looking at. You guys should follow me on X or Twitter if you want altcoin trades, if you want new ICOs. I don't really have time to make live streams. And whenever I mention them on video, if it's plays out within 2 to 3 weeks, people get in way too late anyways. But I have been doing a lot of new ICOs. On Solana, there's this platform called MetaDAO. They do very fair launches. Everyone can get in. You just ape directly from your wallet. Everyone gets pro rata shares. These have been performing pretty decent. Kraken launch. Kraken has launched this project called Yield Basis. It was pretty good. It was about 3x return on TGE within 1 month. So this was a really good sale. I'm waiting for the next one. Legion, another good one. Anyone can sign up to get ICO access on their platform. I do a lot of the sales on here. CoinList, again, very OG ICO platform. I'm doing a lot of sales on here. I recently just did the this one, the ImmuneFi sale. This has a 100% TGE unlock for all investors, so all public sale investors, while the private sale investors are locked up. And the public sale actually has lower valuation than the VC rounds, so these are good terms. Coinbase just launched the Monad ICO, and it performed pretty well, up 70% in the first few days. I'm going to be looking to do more ICOs on Coinbase. I also did the Mega ETH ICO. Very interesting thought for takeaway. So on X right now, there's a big debate as to which one is the better project, Mega ETH versus Monad. But under the hood, okay, Mega ETH is actually launched using Sonar. So Sonar is this public sale ICO platform founded by Kobe. That's an extension of the Echo platform. So Echo is actually part of Coinbase now. So this Mega ETH sale is actually hosted by Echo, which is a subsidiary of Coinbase. So Coinbase themselves hosted Monad sale, but then Coinbase subsidiary hosted Mega ETH sale. So all in all, they're actually like similar ICO types. It's all like US based ICOs, companies. There's a big trend there. So you want to really watch what Coinbase are going to be launching next. And lastly, a little bit of trade based stuff. I'm looking at this new update coming from Coinbase on December 17th. I believe this is the public launch of the base app and maybe even some sort of update on the base token. Maybe the base token will do an ICO. I don't know. But I'm actually very heavily looking at the base ecosystem because of this event on December 17th. So this fits as a catalyst-based trade where I have the timeline and I have the catalyst and I know exactly how to take advantage of it. It's within 1 month. So these are the kind of things I'm doing, but I'm not looking to hold anything long-term on this. Okay, that's it. We're already dragging on to 50 minutes. Hopefully that has been helpful. All in all, major takeaway, major summary here is hold Bitcoin, stack Bitcoin. Bitcoin is very cheap at 90K. The bottom is likely to be in 6 to 12 months over the next, 2 to 4 quarters, let's say. Even if you compare to last two bear markets, if we have a 6 month chop, it's not even going to be much more different from the 2024 chops. So this is not the time to log off completely. It is the time to still be stacking Bitcoin. However, when you look at altcoins, this cycle really broke altcoins. And altcoins, because they never had the cycle, while Bitcoin had this whole cycle, it's really anyone's guess now as to when altcoins can pump. And you really have to look at the ISM data and the global liquidity data. So closely watch these two charts. When these two charts actually start to tick up, that's when you know altcoin season can maybe come back. But until that happens, I'm going to be treating altcoins as trades only. So that's anything that I can close the trade within 1 month based on a catalyst or based on an ICO. And I'm going to be rotating all the profits into Bitcoin. And my portfolio allocation is 80% plus into Bitcoin, less than 20% in altcoins, only as trades at any given time. That's it. That's my plan going into next year. For day-to-day stuff, for new ICOs, for narrative trades that I'm still doing on alts, you should definitely follow me on X at VirtualBacon0x. Again, not bearish. I am literally trading every day, doing alts, doing new narratives. It's just that I don't want to be holding them long-term anymore compared to Bitcoin. Bitcoin is a longer-term hold. But for day-to-day stuff, follow me on X. You can get much more quick alpha there. Okay, that's it. Thank you guys for joining the live stream.